Hello and welcome to another edition of Stock Watch. So, beginning the trading week, we have a bank holiday, Memorial Day in America, but that doesn't mean that there aren't anything going on in the world of stocks. And we're looking at oil today, the oil giants around the world. So Chevron, ExxonMobil, Total, just to name a few. These companies have been told to basically clean up their act as soon as possible, way ahead of schedule. I think a few companies were looking at 2030 to have zero emissions or 2050, depending on the demand of oil. But at a meeting last week, you had Exxon and Chevron. They were dealt blows after recently being told by shareholders and a Dutch court that they are demanding they act more quickly to reduce their greenhouse gas emissions. Exxon the CEO of Exxon, Darren Woods, has argued that customers will still need lots of oil even as the world move away from fossil fuels, and that Exxon could profit from meeting that demand. And even as the world is changing for the oil as well, there's still a long way to go to reaching zero. If you think about all the fossil fuels that are needed, not just for oil, but for other things around the world, gas emissions as well. You're looking at a very, very long, difficult road for a lot of oil companies to be realistically zero emission by a certain date. Exxon, Total, and Chevron might not sell as much oil as they had previously planned, and they'll have to produce it more cleanly than they have been in the past while offsetting unavoidable emissions. Even though this is undoubtedly a step in the right direction for a few of the companies, the world's goal of zero net total isn't going to be reached by forcing just a small group of companies. Even though these are the big guns of the oil world, let's say, it's not really going to have much effect even if these particular companies are going zero net emissions. So a lot of food for thought, let's say, for these shareholders and governments to think about if they're going to try and prioritize this, gathering these group of companies and making them zero net anytime soon. The real change you have to think is will probably come on the demand side. So you have to offer customers, cheaper alternatives to petrol and gas rather than just completely cutting it altogether. So if the demand goes down, obviously prices will go down. This is going to affect share prices as well. However, if they can come up with a different renewable type of energy, then the share prices won't really fall that much. So we'll have to wait and see what will happen in the next few months ahead, probably at the end of the year, when more and more things will come available. And Total as well, the European giant, they're going to be rebranded to TotalEnergies as well, as they obviously focus on renewable energy themselves. The company will have to go through a genuine transformation to meet its zero net target of 2050. Which is quite a significant year. So we'll have to wait and see. So just looking at Chevron first of all today, I just want to highlight that we're just trading on the lower border, the top border of the Ichimoku cloud. And it's a very significant move because I'll just zoom in a little bit more. It's a very significant move because if we are just bouncing on the top area of the border, then I'm expecting more upside roughly at the 103 area. We've pierced the $100 handle now. We are trading quite a long time above it. This is dating back to the 1st of March, so that's quite significant as well. If we stay above the $100 area, then I do expect more upside and a nice buy position up to these recent peaks and towards more fresh highs. So very, very significant there for the oil market for Chevron. Exxon, it's a similar story. If we look at the two charts, they're basically bouncing off each other. The only thing I would say, the difference with Exxon and Chevron is we've got a slight bearish divergence on the RSI on ExxonMobil. So I'm expecting probably a little bit more downside in the near term. And as I said, if we puncture this top border of the Ichimoku cloud, then we could be in for a sharp reverse below, possibly below the $50 area. So the $50 area is roughly about down this area here. So I'll be expecting if we go through this, then a sell position down to what would be a nice psychological handle as well. So just a few things to look out for on the oil front and obviously on renewable energies as well. I just want to take a look at Total quickly whilst we cap off the oil and gas powerhouses. So they've got quite a bit of a choppy consolidation here too, sideways pattern, not too much on the RSI to give me direction, but we have been trading inside the Ichimoku cloud for a couple of weekly sessions now. So this will give me a little bit of impetus if we do break roughly about a 38 zone to start falling lower. and this could cause a bit more of a slide down to these excuse me, these previous peaks as well, so previous troughs as well. On the flip side of that though, if we do manage to stay above the Ichimoku cloud, the recent test areas, then I'm expecting another test at this peak, roughly about the €40 zone, which is quite significant, and then another move higher to recent highs. But it's all about the headlines for oil. Demand and supply are very much a big aspect of what moves the stock prices. So keep an eye on those headlines and keep an eye to see how the company is going to be doing, and if they get any more pressure on trying to cut their carbon footprint by, well, let's say realistically by the end of next year, 2022, and they'll have to put in a sizable resource to try and do that as well. That might cost them a bit of money. So let's just keep an eye on that. And that's all from the Stock Watch today. Thank you very much for joining me. As usual, if you have any queries or questions, please feel free to add them to the post, and I'll get back to you as soon as possible. Have a great trading day ahead, and bye for now.